My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey, folks, welcome back. Today, zooming in from beautiful Santa Fe, Texas. Texas?
That's
Yeah.
right. Santa Fe, Texas.
Yeah, because I'm thinking Santa Fe.
I know you almost
Just Santa Fe, Texas. We've got Chris Hale, who is a real estate investor. She does a couple of different things. She's got an apartment building, and she does a lot of active real estate investing in the way of flips. So, Chris, welcome to the show. Great to have you.
Thank you. Thank you for having me.
So, Chris, tell me a little bit about your portfolio right now. Like, what does real estate investing look like for you right now? We're almost at the end of 2024. What's it all about?
Okay, I have three multifamilies, large multifamilies that I'm passive in. That I'm looking. You did that for some passive income that I don't have to do anything for, just some mailbox money.
So are you like a limited partner in syndications, or what does that look like?
Yes, in syndications, I'm a limited partner.
Got
I
it.
don't have any decisions. I don't do anything but receive money
That's all right.
when they send it.
Yeah.
And but that's really good, and I want to increase that. I have 5 rentals, just single family rentals that I love doing. I'm real good at screening. I've had those houses for about 4 years, and 4 of them have had the original tenant in it since I got the house, and I love that. That's fun to do.
Now, and that's great. And are you flipping as well?
And that's what I was going to go to next.
Okay.
And so what I'm really doing actively is flipping. And I'm really enjoying my flipping. I have about 10 of them out there right now.
Wow. Yeah.
In different stages. I think I have 3 on the market, 2 that are still in permitting, which has turned into a nightmare. And, and rehabs. I'm enjoying that a lot. And I learned when I bought my rental houses, I was purchasing the houses your traditional way, putting 20% down, and putting, getting the loan, putting the rehab in the loan. Well, I very quickly ran out of cash because I was putting 20% down on all these houses.
Yeah.
And so I decided I needed to find a better way to do that. And so now what I do is I partner with people, and I am all the work. I have great teams, my GC who has great people. I have a great realtor. I have a great partner who helps me manage the project. I just take care of it from day one. We from acquisition to disposition. I do it all. And
nice.
I get
How long have you been doing that for, Chris?
4 years.
4 years doing the active flips.
Yes.
Very cool. And how did you kind of get into that? Because you've built up quite quickly. I mean, you got 10 on the go at one time. That's pretty impressive.
Well, I did. Sorry. In 4 years, I just kept going. After I started flipping and it was working, then we hit those 2 years of craziness where everybody was buying everything, and that went really well. And I bought a lot then. It's slowed down a little bit, but I'm still buying and working on the sales. That has slowed way down. So I haven't bought as much in the last, most of it has happened in the last, probably, well, okay, that's not true. I did just buy 2 houses in the last 6 months. So never mind. I was going to say it slowed down, but that's not exactly true.
Yeah. So what are you finding these days with the market? Like, how long are they staying on market before you can get them sold? Have there been any downward pressures on prices in your area? How's that looking these days?
Absolutely. There has been some downward pressure. We've done a really good job in the purchases. So, I haven't lost money. But there has been some downward pressure, and there has been a significant increase in the days on the market. When I started when it was, a heyday and things were moving, and, we would get contracts in a day or 2 days. It'd be, it'd be gone. Now things are sitting on the market for a good, 30 days. I have one on the market that I've had there forever, and I can't figure out what the problem is with that house because it's a beautiful house. But so I am struggling with having it on the market longer. And the money that I actually put into it is all the holding. And so my holding costs have increased significantly because
Mm.
now I'm doing a year of taxes. I mean, I'm doing more taxes, more insurance. You know, when you flip it in 2 months, those
Yeah.
are minimal. But when you hold on to it for the year, you know, or for 6 months, it turns out to be half the year of the taxes and insurance.
Mm. Yeah.
And then of course the lawn care and the utilities.
Maintenance.
I've got tank. Well, the maintenance, they're usually, yeah, the maintenance after they're on the market.
Yeah.
Yeah.
Hey, so, well, I was going to ask you something there, Chris. It's kind of interesting because a lot of flippers, people start off doing wholesaling and then they get into flipping and then they get into long-term buying old single family homes. Then they get into multifamily. You've kind of gone the other
I
way around.
I
Why
know
is
I
that?
did. I
Yeah,
know I did it completely backwards, and I even
that's
tried to
fun.
go to wholesaling since I've been flipping, but that didn't really work out for me because I once I got the house, I'm like, why do I want to give this up?
Exactly.
And so I go ahead and flip it. But I know I did it completely backwards. Um, because I joined when I first got into real estate, I joined a real estate group, and they were very heavy in multifamily, and I got a lot of education in multifamily, and that's really where my wealth is. That's where I expect my retirement to be,
Yeah.
in the passive multifamily. But while the multifamily, while I didn't have enough for another, 50 or $100,000 to put in another multifamily, I needed to do, something. And so I got into these flips.
Yeah. So it's basically to create that active income for yourself, and you might as well do real estate as a job instead of something
And
else, right?
exactly,
Yeah.
exactly. Because real estate's fun and big dollar, real
Yeah.
estate is big dollars, and you just can't do better than real estate, in my opinion.
No, that's awesome. Well, I figured that was probably it, Chris. So, hey, that sounds great. So, what have you been your biggest takeaways? Let's look at a few things. So, first things first, when it comes to teams and the construction side of things, the renovation side of things, sounds like you got a really good general contractor and subcontractors and all that stuff. Has it always been that way, or did you have to kind of learn the hard way that way?
I had to learn the hard way.
Did you?
When I first started, and one of the things, my tip is, even if you like the guy, you know, if he doesn't cut it, he doesn't cut it, and you have to sweetly say, "I like you, but you don't cut it." Because
Yeah.
I hung on
I
to
got to cut you. I got to get rid of you.
that.
Yeah.
Exactly.
Yeah.
Because I hung on to my first GC way too long and really suffered for it. Before I found out, that he was not doing near as good a job as I thought he was doing.
Yeah.
And so I took way too long to do that. I could have made more money getting rid of him a lot quicker. So that's a big deal. And so
How long, just out of curiosity, how long did you hang on to him before you
I
cut
hung on
ties?
to him for a good year,
Yeah.
maybe a year and a half.
Yeah.
Half my time I
Mm.
had that guy, you
Yeah.
know. And one of my problems was that I had picked up so many houses at once because it was the big heyday. And
Yeah.
so you didn't really see the things that he couldn't do well until, first off, the houses were all like in the same stage. And so when I see that he can't manage that guy, or he's not, his tile guy sucks, you know, he's already done two houses.
Right. Yeah.
And so that was one of my problems. I would say don't do six houses at once. Is one of my, I'm not ever going to do six houses again at once. I'm going to do two houses at once.
Yeah. More
Maybe,
manageable.
yeah, it's much more manageable, and you can catch things a lot.
So how did you find a good contractor? A good GC, I should say.
I found a good GC. I went through several
Mm.
quick, once I knew what I was looking for and I knew what I had done wrong with this first guy, I would have some guy, I always have
Yeah.
a GC go with me to a house to check it out and give me a bid, because I'll redesign, my partner and I will redesign the whole house while we're doing that on first look. And then
Yeah.
give me a bid so I can make an offer so it can be done very quickly. And I would try new guys on that first day, right? And you can tell a lot on that first
Mm.
day. And I think I went through about five guys before I found this guy. And I got really lucky. He's really a good guy. He's not only a good guy, but he's an excellent contractor, and his people are excellent.
Oh, that's huge. Yeah. That makes all the difference. That makes life much more pleasant. So you've got it dialed in for the general contractor and the subcontractors. What do you find works best for you for finding the properties and the deals, being able to get them at that kind of price point that you need to make a profit?
I do rely a lot on realtors.
Really? Yeah.
Yeah, I
Okay.
do. And I don't have a problem paying a realtor. I think people should be paid what they deserve, and
Mm-hmm.
they provide a lot of service, I think. So I will, depend on some realtors. Now, one I have that is particular, she's on my team. She does the designing with me. I use her a lot. But I've got, some foreclosures that I've picked up. Um, I, I have picked up a couple of wholesale deals,
Mm-hmm.
but not a lot of wholesale deals. A lot of those don't work out, you know,
Mm.
but most of my deals come from realtors.
So are these unlisted properties or
Some,
what are they?
some are unlisted, but
Yeah.
a good number of them are listed.
And are you just kind of going in there and having to really lowball the owner to get the kind of price that you need?
Well, I try to not lowball it too much. I
Mhm.
do try to pay the highest that I can pay and
Mhm.
make a profit, right?
Yeah, well,
But
yeah.
yeah, I'll go in and get them, get rejected all the time.
Well, I'm thinking, yeah, that's
You know,
that.
sure.
My recollection is that's why a lot of realtors don't like working with flippers. They just don't like going in with those lowball offers and getting turned down regularly. So it sounds like you got a good realtor on the team.
But I do. I have an excellent realtor on the team, but I also tell the realtors exactly what I want.
Ah, there you go.
So
Yeah.
it's got to be, that's very, very important that the realtor knows what to get you. It's got
Mhm.
to be a piece of junk, right? It's got right. I mean,
Yeah.
it's got to need some rehab, right? You really, it needs to be, definitely a piece of property that needs some work.
A
Uh,
fixer upper. Yeah.
yeah, and yeah.
So Chris, how are you financing these flips? Because it's pretty cash intensive. What do you use investors? Do you use hard money lenders? What works well for you?
I don't use hard money lenders, although I have, and they
Mhm.
have their purpose, and I like hard money lenders. But I use individual investors for private money.
Mhm.
Um, and what we do is I'm all the work, and they're all the money. And sometimes I have like a group of 3 or 4 that do most of my deals, but they'll put up the cash for the purchase of the house and the rehab, and I'll do, and they're working their W-2 job and are very busy, and I'll do everything, from acquisition to disposition, and then we split the proceeds 50-50.
Smart. Yeah. So nice. I think that's a really smart way to do it, Chris, because
Thank you.
that's uh, more generous with your investors and lower risk for you as well, really, if things take a little longer to sell. You're not
Yes,
paying interest payments every month. Yeah.
absolutely, absolutely. I've been stuck in hard money before,
Yeah.
and that is a scary thing. When you're spending $1,200 a month in interest, and it's just interest on a
Yeah.
hard money loan, and your house is on the market being stuck, it's a scary thing.
Yeah, not such a big deal when it's go 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 times, but these times when it's a little bit of the doldrums, that can really eat into the profit margin quickly. Now you mentioned that you take care of the holding costs. So is that kind of, do you have a deal with your investors that, hey, I think it's going to take this long, but if it takes longer, I cover
Well,
whatever.
even if it takes that long, the rehab does not include utilities.
Okay.
I pay all the utilities from day one.
Yeah.
I take care of the lawns. I take care of typically taxes or insurance. I take care of about anything that comes up that you're
Yeah.
requiring holding. They purchase and they give me rehab,
Got it.
and then
Yeah. No, that's smart. What's the price point on the kind of houses you're purchasing these days?
um, I'm purchasing about um $300,000 houses. I
Hmm.
have to. I really like the $150,000 house, but I I got stuck somehow getting higher. I have a couple on the market that are $700,000, and
Ooh,
that's like way too high.
yeah.
I recommend to anybody, don't really go that high. Your rehab is bigger, your purchase is bigger, all that is bigger. Um, but I got into this 1920s house, these houses. Um, Houston, I'm very close to Houston, and it has a regentrified area. And so I got into buying those houses, and that was really
Mm.
totally cool. But I really like to I want the selling point to be about $300,000. The ARV needs to be about $300,000.
Okay. So what are you purchasing for and what's the rent? Like what does it cost you to get these?
I'm doing one right now. The purchase is about $85,000. The rehab is $47,000. And that's all cash. We're going to walk away with, about $40,000, about $46,000 that we'll split in half.
Nice. Yeah. No, that's what it's all about.
And that's mostly, those are usually, my net proceeds. It's usually about, $40,000 that it gets split between the two of us.
What kind of volume of deals are you doing? I know it's a little slowed down a little bit, since the heyday, but on average, how many are you doing a year?
I'm doing about 5 a year.
Okay. Yeah. Yeah. That's better than punching the clock at a job.
Absolutely. I mean, you don't work every day.
Yeah. Yeah. So, hey, we're wrapping up 2024 right now, Chris. What are your plans for 2025?
2025, I'm going to sell. I've got, so many on the market right now. That's my goal. Is I got to get these things sold. And I keep saying I'm not going to buy another house until I do, but then these good deals come up, I buy them. But for 2025, it's really, do more flips, collect more capital, and put it into multifamily. That's what I've been doing.
So that's really the plan, right? You're doing the flips to kind of keep the lights on, plus to build up the war chest to buy more multifamily passively.
Absolutely, passively, exactly. Not buying a multifamily. I've done a multifamily. I've done a multifamily on my own. That was the first deal I ever did. Mm-hmm. I did 31 unit multifamily, which was quite a learning experience.
And you just had enough of that.
Yeah, passive is the way that I want to go.
Yeah. That sounds like 31 headaches sometimes. Chris, if people want to connect with you and find out more, what should they do?
Email me at chris@cnrholdingsllc.com. And that'll work.
Perfect. Well, Chris, thanks for being on the show. It's been a lot of fun.
Well, thank you so much for having me. I appreciate it.
All right, everybody. Take care. We'll see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.